Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Friday afternoon. As always, before we jump into it, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using during this live stream, so the charting software, the broker, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I recommend, if you haven't done so in the past, is go and check out the Elliott Wave principle, which you can read online for free when you're using the link in the description down below. That said, that's it. Let's jump right into it. Let's see. We have a slightly, technically it's a pretty much break-even start into the day. With a slight green tendency today. Not sure what we'll be able to cover today fully. We're still working on, I don't know how that is. Okay, I'm gonna try to see. Still working on structuring the prediction sheet in quotes, so to make sure that we keep track of different forecasts and also know when and in which episode that forecast was made. It's still a little bit of a back and forth between me and my assistant to figure out the best structure and also to share things in a way that actually are easy to understand for all of you, but also easy to understand for her to update the sheet accordingly after each live stream. Now, I think for today, I actually have a bunch of other things on my list that are a little bit more important because it's beginning of the month. So for example, for our IT business, I have to deal with the affiliate payout, and then there's some monthly accounting work to do and so on. So we're gonna keep it simple today and just look through everything in the usual way like we did prior to introducing the cheat sheet. So one thing where we're at Intel, no, we start from the top. So Barnes & Noble Educational, my forecast here, as said, is that we supposedly should be able to reach the $14.20 or $19.76 in the next couple of weeks based on the bigger scale labeling. You can check out yesterday's episode, the episode from the 30th of October, so 2 days ago, for more details about that. Now here, on the short scale, it's possible, considering we have a decent move up, that either this is our entire corrective pattern, turning around at the 61.8 retracement, or that this is only wave A. We're now getting A, B, C, and then from there we're going further down. Now we can see on the 8-hour time frame where we're able to label those smaller moves as well. We actually have a few candles in there that are just not providing any additional information, which means we'll actually focus on, let's see, 12-hour. From now on, we're actually going to focus on the 12-hour time frame on Barnes & Noble Education, or at least we're trying to do. As that, so while we entered at 8:45 pretty much here, I mean, we had a previous position based on a wrong assumption that this might be ABC, my bad. But overall, we re-entered here at 8:45, manually a little bit later at 8:90 as well. And from the looks of it, we now finished our first wave up here, potentially our first wave, a second wave down here, and could from here now therefore see the start of wave 3. And this, while our overall target is relatively high, we can also look at a shorter term prediction, which I'm not sure yet how to best keep track of short-term versus long-term forecasts. If this is indeed wave A, wave 1, wave 2, then we would be expecting to at least reach the 138.2 extension here in wave 3, but usually we would expect actually to hit the 261.8 extension level. So I mean, there are a couple of extension levels that our third wave usually tends to hit, or usually mark the endpoint of a third wave, and the most common one is the 261.8 extension. We can see if that were to happen, we would already be at $17 per share. Now this would obviously not happen overnight, but over the next couple of weeks, that we see a 1, 2, 3, 4, 5 taking us up there potentially. And then it would already eliminate our first profit target along the way. If we are indeed already, so correction finished, and we are now in the third wave, and that third wave terminates at the 261.8 extension, we can clearly see that then wave 4, wave 5 would actually allow us to hit the 100% target at 19.70, and that would then, that wouldn't be the finish of this wave. So 1, 2, 3, 4.5. Yeah. So yeah, still not a bad time to enter. Obviously, entering here was better. Entering now also not that bad. There is the option that the correction is not finished. If you were to enter right now, then you would need to place your stop loss at 831 to account for potential ABC, ABC, ABC down. So for maybe a flat corrective pattern. Again, so right now, not the worst entry in terms of risk reward ratio, in my opinion. But again, do with that what you will, do your own research. From the looks of it, it would be fitting that we turn around at the 61.8 retracement, which is in the area of wave 4 of the previous impulse wave of a lower degree. And considering that we have a quite perfect free wave pattern down here, I think the most likely scenario is indeed that from here we now will slowly develop our upwards impulsive movement. So it's going to be interesting for our small Barnes & Noble educational exposure of an astonishing 30 shares. I know it's not a lot, but considering what we expect here to happen, it's also better than not being invested. Unfortunately, there are no options for Barnes & Noble Education Inc. Otherwise, I probably would just trade or buy call options right now. Anyway, for here, or for the purpose of the stream, we are moving on. Next thing on our list is GameStop. GameStop having a slightly green day today. I don't fully remember, but the last episode mentioned would also be the one from 2 days ago, where we talked a little bit more in detail about GameStop. If we cover, or if we look at the recent development, we have a clear 1, 2, 3, 4, 5 impulse and are right now in a corrective pattern. Now, theoretically, that corrective pattern could have finished here already, and we are now in the next upwards impulse, or slowly. It could be that we are only looking at one part of the corrective pattern. We are now getting a wave B, which would then be potentially like this, wave A potentially like this, wave B would be till here, and so wave C would take us till $23, and then from there potentially till $23, and then from there we would get the next corrective wave. However, again, similar rules or similar guidelines. We are in the area of wave 4 of the previous impulse wave of a lower degree. We retraced almost 61.8%. We got close enough here, so well, the pattern, the corrective pattern down here isn't super obvious or clear. Also not a bad entry right now. Stop loss, however, theoretically either would need to be at 22.05, which would assume betting on that the correction is over, or at 20.49, assuming or allowing for the correction not being fully over yet. Yeah, so there are two options, either limiting the risk, but also risking that one gets stopped out here just to then basically go a little lower and then go up, or having a little bit more risk. I mean, there we're talking about around 10% risk till down here, but accounting for the possibility that the correction is not over. So personally, if I were to enter now and wouldn't already have more than decent exposure to GameStop, I would probably enter now with the stop loss being here, simply because in this way it's like, what do we have, like 50 cents or so, so 10% is $2.50, so 2% risk and huge upside. So yeah, moving on from here to Grab has their earnings on the 12th of November. Yeah, we'll have to wait and see. From the looks of it, we have 1, 2, 3, 4, 5 finished here on the weekly chart. Not going to jump too much into it. So again, the episode from 2 days ago dives, I think, more into that as well, as far as I recall. So here our predictions are unchanged, with the minimum predictions being 942 to 1088, which would be based on the assumption that this is wave 1, wave 2, and we are slowly on the weekly chart developing our third wave, also assuming that we hit our usual target. So if you were to enter right now, your stop loss would, however, need to be at 290. So there's a little bit more risk in a trade here. Personally, I'm just holding one call option that expires in January 26. So if I'm right, then we'll go further up and actually develop a 1, 2, 3, 4, 5 impulsive pattern here. Then that one will print nicely in terms of risk reward ratio. If I'm wrong, it's also not the end of the world, because I limit my risk to the $50 premium I paid. Now, moving on, next on the list would be immersion. Immersion targets are around $25. We can see the 8-hour chart here still has some clutter, so not sufficient for us to label even the 12-hour chart. Probably going to work here with a daily chart. Yeah, like if we zoom out further, we can see that we have, okay, we would need to zoom out even further. What we are looking at right now, so on the bigger scale, you can also check out the episode from the 30th of October. My assumption is that we're looking at 1, 2, 3, 4, 5, and which potentially, again, if we consider wave 4 of the previous impulse wave, although that's a leading diagonal, not an impulse, so we'll see how accurately that hits here. We are already in the territory of wave 4, what we usually expect somewhere towards the bottom. The 61.8 retracement, which would mark the perfect point, which leads me to believe that we currently have a 5-wave impulse. We'll get a 3-wave correction, and then we get another 5-wave impulse down to finish off this potential corrective pattern. So it could end up being something like this. So going up to maybe 1150 and then going down to 670, or going up only till 950 roughly and then going down to 670. So that would be the assumption that I have right now. So entries here don't make that much sense yet, unless you spend the time to label this move here. If it's already 5 waves down, then it would be a decent moment to jump in and benefit from the corrective movement upwards. But overall, I think that, again, like overall, we still see more downside here short term. The long-term prediction, however, is also bullish, with quite some upside over the next couple of months and years. Moving on to Intel, our Intel forecast was also bullish. So our actual forecast is in the area of, we actually hit some of that or not. Our Intel forecast is 2466, which we hit yesterday. Unfortunately, we didn't have any exposure here. So we have our confirmation. We actually got it quite right here in multiple aspects. So if you check out yesterday's episode, you will see that we actually discussed that very likely the corrective pattern isn't finished yet here, and that we would expect potentially a further push down to the 61.8 retracement. And based on that, we would then get a minimum target of, I'm going to delete the alert, of 2464, which also was hit yesterday at based on the earnings, even though they missed on earnings. And it hit 2485. So yeah, like we would have been right here. Unfortunately, we didn't have any further exposure to Intel, but basically we now finished 5 wave up, corrective wave down, and already hit our profit target here. So we'll have to, we're not going to do that today, but during the next week, we'll have to dive into that to get the next prediction. However, so here we reached 2064. So if you would have acted based on yesterday's stream and created a pending order at 2065 with the stop loss at 1851 and a take profit at 2464, then your order would likely, let's see which way we move just to make sure. Yeah, then your order would likely have triggered both ways. So we don't see fully if we first went up, then went down, but considering that after that we went up, it doesn't really matter that much because your order would have triggered here. And nope, sorry, minute chart. Oh, there we go. So your order would have triggered here and then minutes later hit the profit. Now that's a missed opportunity. It's something where obviously on one hand I'm fine with it, but I'm happy that I'm turned out to be right one more time. On the other hand, however, obviously, if I would have acted on that, I mean, looked into the option prices or so to maybe get some call options, although options would then be expiring on Friday, so it would be a different play. Yeah, like would have, could have, should have, doesn't really matter. So let's stick on the 4-hour chart here for now. So we like to summarize, okay, that actually prediction came true. So for now, we don't have a further prediction for Intel, because we hit our target, which technically marks finishing 1, 2, 3, 4, 5, A, B, C, and then that would actually be, that would actually mark the minimum target for an ABC pattern. So for now, then I would say bearish. Again, we'll have to do a closer analysis, but that minimum target was based on the assumption that we didn't hit the bottom yet, but that this is just a corrective movement in between before we reach the bottom, which means currently the overall outlook would be bearish, that we now develop 5 waves further down that actually take us below $18.51. However, that's on the small scale for our chart without zooming out and accounting for the bigger picture. Yeah, I'm gonna just focus on the fact and be cheered up by the fact that our labeling from yesterday actually came true within a couple of minutes yesterday evening when the earnings were announced in aftermarket trading. Moving on, and next on the list we have cost targets for us. I'm not sure if they're correct. Gonna have to check why do we have, either I did that or you did that, but why do we have a $5 target and a $17 target? So that doesn't make sense at all. So we have yesterday's price at 17.12 recorded here, and now we have a set of $5 target and a $17 target, and that doesn't check out. So it either is both targets down or both targets up. Gonna look into that in a second. I just got the notification that we closed out our GameStop calls for $1 per call, so we can actually go ahead and sell next week's calls already. So we sell 5 covered calls at 30 for $100 something per day. So and submit. There we go. So $125 in premium overall. 5 times 24, yeah, so, or 25. So going for that. And we could obviously wait for an upward move in GameStop and then only sell the calls, but this way we kind of like have the money in the pocket and move on. Yeah, so costs. So I think there the Google sheet is not accurate because again there are like misleading values here, which doesn't make sense. I'm not sure that 501 is a target at all. What we have here could visually be A, B, C, and we're developing the next 5 waves down. It could also be wave 1, 2, 3, 4. 4 maybe not finished, and we're waiting for wave 5 up. So on one hand, we would have targets at 1744 to 3205. If we are in a 5-wave impulse up, I would probably wait for a cross of the 879 high before I would consider entering further. We already have a small position that I will not change. And on the other hand, if we are on the downwards move, or even if that correction just hasn't finished fully yet, that would, so if we cross 655 to the downside, then that would be an indication, or that would be confirmation that the corrective pattern hasn't finished yet, or an indication that we're going down. We only know for sure if we are just looking at a corrective pattern followed by a downward impulse if we fall below 381. So it's a little bit tricky. On one hand, we can wait for 879. If that one falls, then we would have our upside. Yeah, not full confirmation, but not confirmation, but you guys know what I mean. So it would be an additional aspect or sign that we indeed finished the correction here and are now developing 5 waves up. So no prediction for now for costs, but again, if it turns out as 1, 2, 3, 4, 5, then those would be the profit targets. However, you do not have to write them down because we just will not have a forecast for cost for now until we have time to dig deeper into the overall pattern and confirm some of the sub-waves, which we will do next week or during the next week, or try to do. Moving on to NEO. NEO we removed from the chart because NEO we removed from the chart because we already hit our target. We got out here and we don't have a fixed target. Yesterday, I think yesterday I mentioned, or maybe it was the day before yesterday in the episode, that this, while it gets close to the 61.8 retracement and we are in the area of wave 4 of the previous impulse wave of a lower degree, this doesn't obviously look like an ABC 3-wave move, making it possible that this is only wave 1 or wave A. We are getting wave B, or B might already be this, and we're still getting wave C down. So and we can see basically that based on that, if this would be our wave A, wave B, and wave C, that our wave C targets would be down there between 470 and 397, which means technically if we shoot a little bit below the 61.8 retracement, that would also be okay. Overall, not the best time to enter. One could enter in short, so in small tranches already, but stop loss would need to be at the low that we have here at 366. So quite some risk to an undetermined upside so far. We're gonna dive into NEO as well in the future as well. I'm gonna just add it to our prediction list again. NEO. Oh God. NEO Inc. Selected them. So again, so we don't have a prediction yet, but I'll add it to the sheet so we don't forget to actually provide one. Novavax on our list has a short-term target of potentially reaching 808 for a fifth wave push down, and then, however, upwards targets depending on how far we go down. That's obviously an important aspect in that whole assumption. If we don't reach the 808, then we would be around 2884. Why? Please do not update the Novavax entry. So we're gonna have to dig into that. I still have to decide or figure out how to best keep track of short-term versus long-term outlook, because it would be nice to have the numbers written down that short-term, I think it's reasonably likely to have or reach the 61.8 retracement, whereas the long-term outlook is still super bullish in my opinion. So nothing for now for Novavax other than the short-term target of 808. NVIDIA, our target there would be 150.79, 162. So we assume that we finished our correction here as ABC. There is the option that we're correcting a bigger pattern where this would be 1, 2, 3, 4, and then we get wave 5. However, entries right now are not that bad. Stop loss could be at the low that we had at 132.11. And if this is indeed correct, we would expect to reach 150 to 162 in this next push here, or next impulsive pattern, which means the risk-reward ratio isn't that bad, even if this turns out to be a bigger corrective pattern. So yeah, so there's that. So SMCI has been dumping a lot, and that's interesting because during one of the not recent episodes, but maybe last week still or so, we looked at it here and there, and the assumption was that, well, on one hand, if this would be ABC, we would be turning around exactly at the maximum area that we expect for a wave C, and however, it would only hit the 21.4% retracement, which is why we pointed out, okay, one could have gone long from here, but then with a trailing stop. But if you recall, I also mentioned that personally, I don't like that fact that we turned around at 21.4% and consider that the correction is too small. Now, from the looks of it, because we now got obviously the additional push down here, what we're looking at is basically wave 1, wave 2, and currently wave 3. Wave 3 might not be finished yet, although 1, 2, 3, 4, 5. So when we get to the 261.8 retracement, for wave 3, then we get a wave 4, we get a wave 5, and that will only finish the first part of the correction, where we would then get a little bit of relief and then get another push down. So there were obviously a lot of people that made a killing with puts on SMCI. For sure, some people got burned by selling puts. But overall, we still expect to correct down because we are correcting an overall bigger movement, as we can see, where we would expect to reach at least the 38.2 retracement. And from the looks of it right now, it will play out as 1, 2, 3, 4, 5, ABC, and then we get another push down. So I would actually expect that long term we would reach at least the 50% retracement, if not the 61.8, which points towards another, now we are at 25, another, not 90%, but what's that, almost 60% till here, and yeah, more than 60% till down here, which means I'm gonna add it to the list, SMCI, SMCI, there we go. Super microcomputers, yeah, price right now 21.51, and the prediction would be yeah, at least 18.38, down to 568. So that would then be 0.1. Yeah. Actually, technically, I shouldn't have written that down, but because, yeah, like, Rai, please add the timestamp of the video and the video link to the SMCI forecast. Yeah, so obviously the goal in the end is that I don't have to type it, but that Rai takes care of noting it. Anyway, so moving on, so we have SMCI, we have NVIDIA, we have NEO, Novavax. So next on the list would be SPY. Our SPY target is 595.22. Again, Rai, again, like I mentioned yesterday, if it's upwards, then the first goal is the lower one, so 587.18 and 595.82 or so. Yeah, so because that's the current price, that's the first target we hit, that would be the second target. If we're talking about dropping, that's the current price, that's the first price it would hit on the way down, and that would be the second price that it potentially hits on the way down. Yeah, so please pay attention to that. Thank you very much. Moving on, so for SPY, our target is 587.18, based on the assumption that we have our ABC finished here, and actually we moved a lot from the chart. Yeah, so then that would potentially be 1, 2, 3, 4. So our, let's check if that was the basis for this prediction. A little tricky right now. So, but should be like this 5, 9. No, those are even higher. Okay, so we'll have the actually, I'll have to adjust that. So I'm gonna say no prediction for now, because actually from the look of it, it might be that we are indeed retracing this, in which case, let's check expansion. I think wave C here is too big, and what's going on here. So yeah, so while we're still within the, and here we have 1, 2, 3, 4, and then we get wave 5. So actually short term would be most likely downward. So I don't know what I saw differently there yesterday, but we'll dive into SPY as well from a bigger time frame and lower time frame in one of the next episodes. So we would say 566.96 would be the short-term target, and yeah, well, which again would align with like wave 4 of the previous impulse. It would still be within the fitting area of ABC wave C forecasts. And then if we assume that this is set as wave 1, 2 for the last wave, then that would be wave 3. Wave 4 is maybe finished, maybe not finished, probably not finished yet. So that might still turn out as ABC in some way, maybe even go a little bit higher. So short term, there should be a little bit more upside, so that basically our fifth wave forecast also brings us into that area. But then we would have a bunch of different things that point us in the same direction here. If we look closer, yeah, still not enough here. So I guess we'll stay on the 8-hour chart for now. So, but I think short term, I mean, very, very short term, we should still go a little bit up in a wave 4, but then we should get another push down into the area here. So confirming that we're correcting the whole thing. Now that's very, very quick and dirty, because we'll have to actually label the whole thing from the top to see if we have an additional indication for either the correction or the end of the correction. But for today, that's going to be enough. So for SPY, as said, 566.96 with no secondary prediction for now. And that would be also today. So yeah, so and yeah, and exactly, yeah, so there the video link is missing, or video, yeah, okay. And that brings us to NASDAQ, and with that we can finish up today. I know it's a shorter episode. NASDAQ has been gapping down. That was yesterday, and today it's slightly gapping up. Visually that would be 1, 2, 3, 4 in progress. So if I'm gonna try to find some future stickers, so we actually have overnight data to work with. Yeah, we can see 1, 2. If that is 1, 2, that's one. So that could be 1, 2. Sorry. Then we see we bounce at the 361.8 extension. So 1, 2, 3. Now 4 in progress. Will depend on where 4 is, but we'll have we actually might have a little bit more downside here to come. We have a 1, 2, 3, 4, 5. So we finished an impulse here. Could be 1, 2, 3, 4, 5, finishing impulse. And now basically 1, 2, 3, 4, 5. Although we fell short of our minimum target, yeah, so that's one where I was at least partially wrong. But from the looks of it, or from the first indications, unless the overnight data that happens helps a little bit to change that. But looking on, we hit the minimum target that we had based on the bigger pattern that we can see here. And overall, I think we're now retracing this, which would actually, again, if we look here, that's wave 4 potentially of the previous impulse, which happens to overlap with the 38.2 retracement. So we'll actually say there's another 600 points downwards move possible. So right now the price is 22,330.34 here, and our prediction would be 19,730.61. Technically even further, because that would only be 1, 2, 3, 4. Then we get wave 5. That already brings us here A, B, C, and then we would get the next push down. So, but if we, for that we first need wave 4, 5, and then ABC to be able to predict further. But that would be the current forecast for the Nasdaq. So 600 points further down before we potentially go further up. Short term still possible that we, again, wave 4, wave 5, then ABC, so that we move like up, down, up. Stop loss if you bet against the market would be at the high at 20,600, giving you like unfortunately like a 1-to-1 ratio, so it's not worth jumping into right now. We probably, unless you I mean maybe if there's more downside, but to the minimum target that we would expect here, it's a 1-to-1 ratio. So do with that as you will. And that pretty much sums it up for today, I would say. So because we covered all our positions, we covered everything that I have in my tracking sheet. As said, so I'll try to figure out how to best keep track of, or let's switch here. I try to figure out how to best keep track of even short-term predictions and long-term predictions in a way that's easy understandable, that allows us to circle back or reference back to when exactly I made a statement, because it's easy to say, well, I told you months ago, but nobody's going to bother to double check and watch I don't know how many episodes to try to figure out if that statement is true or not. So by having everything on the record, it makes it easier to see how often I'm wrong, how often I'm right, and when I'm wrong or right, to also jump back to those specific videos or episodes, which should help you guys and basically provide you with more insight into how accurate my predictions or forecasts are. Anyway, thanks for stopping by. Don't forget, like, subscribe, enable notifications as usual. I wish you all a pleasant weekend, and I hope you also had a positive trading week, just like I did. And then we'll see each other again on Monday, if I'm not mistaken. I'll have to check the Nasdaq holiday calendar. Either way, if you subscribe, you'll get notified. So subscribe and enable notification. You get notified when the next live stream is. So thanks for stopping by. Have a great day and a great weekend, and I'll see you all in another future episode of Daily Market Mastery. Till then, bye-bye.